3 massive mistakes are destroying your moving average trades right now. You're entering too late, getting faked out by sideways markets, and probably using the wrong time frames. Keep doing this and your trading account becomes a donation to Wall Street. Alright, real talk. If you've tried trading with moving averages and lost money, you're not alone. I've been there. I've watched my account drain because I was doing exactly what everyone else taught me to do. I saw a crossover, hit buy, and watched the market laugh at me as it reversed the other direction. Most people fail with this indicator because they're using it completely wrong. They see a crossover and instantly hit buy. They chase price way too late. They're trading on 5-minute charts getting chopped up by market noise like vegetables in a blender. And then they conclude that moving averages are useless and lagging and a waste of time. But here's the thing. Moving averages aren't useless. They're actually one of the most powerful tools in trading when you know how to use them correctly. Not the textbook nonsense that blows accounts, but the real tactics that separate broke traders from profitable ones. And today, I'm breaking down the strategy that actually works. The one I wish someone had shown me when I first started. You're watching M Cubed, Money Mindset Makeover. This isn't just a channel. It's a mindset revolution where we flip the script on money and build real wealth in a world that's rigged against us. Subscribe to Elevate Your Money Mindset, Elevate Your Life. And stick around, because today, we're cracking the blueprint that can take you from confused trader to confident investor. So let me start with the basics, because I know some of you are brand new to this. A moving average is just a line on your chart that shows you the average closing price over a certain number of candles. Think of it like this. Imagine you're trying to figure out if your spending is going up or down each month. You wouldn't freak out over one day of overspending, right? You'd look at the average over a week or a month to see the real pattern. That's exactly what a moving average does with price. It smooths out all the choppy noise and shows you the actual trend. Now you've got options here. The 20-period moving average shows you the short-term trend, like checking your bank account balance every day. The 50-period moving average gives you the medium-term trend, kind of like your weekly budget check. And the 200-period moving average shows you the long-term direction, like your yearly financial goals. When price is above the moving average, the trend is up. When price is below it, the trend is down. Simple concept, but incredibly powerful when you use it right. Here's where most traders completely screw it up, and I did this too when I started. They watch a YouTube video, see the 20-period cross above the 50-period, and instantly slam that buy button. They see what's called a golden cross and think it's a golden opportunity. I can't tell you how many times I got burned doing exactly this. Here's the problem. That crossover strategy only works in strong trending markets. And guess what? The market only trends about 30% of the time. The other 70% it's moving sideways, chopping around, going nowhere. So when you're blindly taking every crossover signal, you're getting faked out 7 times out of 10. It's like swiping right on every dating app profile and wondering why you keep getting ghosted. No strategy, just hope and prayer. And I see people using 5, 6, 7 moving averages at once, turning their charts into rainbow spaghetti. More lines don't mean more profit. They mean more confusion, later entries, and missed opportunities while you're trying to figure out what all those lines are telling you. Plus, and this is huge, trading this strategy on lower time frames is a straight-up trap. I learned this the hard way. I was trading 5-minute charts thinking I was going to catch quick profits. All I caught was quick losses. 5-minute and 15-minute charts are full of noise and fake signals. It's like trying to predict the weather by staring at a single cloud. You need the bigger picture or you're just gambling. Let's zoom in on the real struggle here because I know this is personal for a lot of you. You're already dealing with enough financial stress, right? Student loans are crushing you. Rent is eating half your paycheck and it goes up every year while your salary stays flat. You're working a side hustle just to cover the gap between your expenses and your income. And after paying bills, buying groceries, and trying to have some semblance of a life, you've got maybe $500, maybe $1,000 sitting in your account. And you see these trading influencers online flexing their gains, showing off their passive income lifestyle, driving nice cars, traveling the world. And you think to yourself, maybe this is my way out. Maybe moving averages are the key to finally building wealth and escaping this paycheck to paycheck cycle that's slowly killing my soul. So you open a trading account. You deposit that $500 that you really, truly cannot afford to lose. That's grocery money. That's emergency fund money. But you're desperate for a breakthrough, so you take the risk. And you start following the basic crossover strategy everyone talks about. Fast line crosses slow line, you buy. Slow crosses fast, you sell. Seems logical, right? Week 1, you're down $100. You tell yourself it's just a learning curve, everyone loses at first. Week 2, another $80 gone. Now you're starting to panic. Week 3, you're questioning everything. Should you quit? Is trading even real? Are all these success stories just fake? And that $500 you started with is now down to $250, and you're staring at your screen feeling like a complete failure. This isn't because you're bad at trading. This isn't because you don't get it. This isn't because you're not smart enough. It's because you were taught a strategy that only works in specific market conditions, and nobody, absolutely nobody, told you what those conditions are. They sold you the dream without giving you the map. You're not lazy. You're not stupid. You're just using the wrong blueprint in the wrong environment. And the system profits off your confusion. The brokers make money whether you win or lose because they collect fees on every trade. The gurus make money selling you courses on strategies that don't work. And you're left holding the bag, wondering why you can't seem to figure this out. But here's the real twist. Once you understand how professional traders actually use moving averages, this whole game changes. And that's exactly what I'm about to show you right now. Forget everything you learned from those get-rich-quick trading videos. I'm going to show you how the pros actually do this. The stuff they don't teach you in those free YouTube tutorials because they want to save it for their paid courses. But I'm giving it to you right now for free because that's what M Cubed is all about. First thing, use just 2 moving averages. That's it. The 20 period and the 50 period. No rainbow chart, no analysis paralysis, no confusion. 2 lines give you all the information you need without overcomplicating things. When I simplified my charts to just these 2 moving averages, my trading immediately improved. I could actually see what was happening instead of drowning in information overload. Second thing, and this is critical, stick to higher time frames. I trade on 1 hour, 4 hour, and daily charts now. These give you cleaner, more reliable signals. Lower time frames are full of market noise. It's like trying to have a deep conversation at a music festival with the bass pounding in your ears. You need clarity, not chaos. When I switched from 5-minute charts to 1 hour charts, it was like someone turned on the lights. Suddenly I could see the real trends instead of just random squiggles. Now here's the golden rule that changed my entire trading career. Only trade the next crossover if the last 2 were successful. Let me say that again because this is huge. Before you enter any crossover trade, look back at the 2 most recent crossover signals. Did price actually follow through after both of those crosses? If both were profitable moves, green light, take the trade. If even one failed, red light, skip it completely. This one filter protects you from most bad setups. It's like checking reviews before buying something online. You wouldn't trust a product with mixed reviews and 3 stars, so why would you trust a crossover strategy that's been failing? This simple rule saved me from so many losing trades I can't even count them. Let me walk you through a real example so you can see how this works in practice. Let's say you're on a 1-hour chart, watching your favorite crypto or stock. The first crossover happens. The 20 period crosses above the 50 period. You're watching closely. Price moves up. Clean win. Okay, the strategy is working in this market right now. Second crossover. The 20 crosses below the 50. Price drops afterward. Another win. Now the market has shown you twice that it respects this crossover strategy. It's following through on the signals. Third crossover comes along. Fresh signal. The 20 crosses back above the 50. Now here's the key question. Are you taking this trade? Hell yes you are. Why? Because the last 2 crossovers were both successful. The market is telling you loud and clear that it respects this strategy right now. So you enter the buy. You place your stop loss just below the recent swing low so you know exactly how much you're risking. You set a target that's twice the size of your stop, so you're risking $1 to make $2. Price moves in your favor. Trade hits target. Clean win. That's how it's supposed to work. But now imagine if the last 2 crossovers had failed. The first one crossed up, but price went sideways. The second one crossed down, but price reversed and went up anyway. Would you still take this third signal? Of course not. That's how you filter out low-quality trades and protect your capital. You wait until the market proves the strategy is working before you risk your money. Now let me show you how to make this even more powerful. Add a 200-period moving average to your chart as a trend filter. This shows you the bigger picture trend direction. The rule is dead simple. If price is above the 200 moving average, only take buy signals. If price is below the 200 moving average, only take sell signals. This keeps you trading with the major trend instead of against it. Think of it like swimming. You can swim with the current or against it. One is way easier and gets you way further with way less effort. Same thing in trading. When you trade with the major trend, everything becomes easier. Your win rate goes up, your losses get smaller, and your confidence skyrockets. I'm not making this up. This single addition can boost your win rate from 38% to 48%. That's a 10% increase just from adding one line to your chart and following one simple rule. And when you combine it with the 2 successful crossover rule, your strategy becomes legitimately strong. You're not gambling anymore. You're making informed decisions based on what the market is actually showing you. Now here's a bonus tactic that most people completely miss. Moving averages aren't just crossover indicators. They're also dynamic support and resistance levels. Price bounces off them. Price respects them. Price reacts to them. And you can use this to your advantage. For example, let's say price keeps bouncing off the 50-period moving average multiple times. You're watching it test that level over and over. And then you see an overbought reading on the RSI indicator. That's a high probability short setup right there. Multiple factors are lining up. The moving average is acting as resistance, and momentum is showing overbought conditions. That's confluence. Or flip it the other way. Price dips down to the moving average and the RSI shows oversold. That's a solid long setup. You're buying at an area where price has bounced before, and momentum is showing the market is stretched to the downside. Again, multiple factors lining up in your favor. When I started trading with confluence instead of just reacting to signals, everything changed. I wasn't just hoping for the best anymore. I was stacking the odds in my favor with multiple reasons to take the trade. And that's when my consistency started improving for real. Here's the mindset shift that changes everything, and I need you to really hear this. Stop treating moving averages like magic lines that guarantee wins. Start treating them like tools that give you an edge when used correctly. The difference between broke traders and profitable traders isn't intelligence. It's not even capital. I've seen people with $10,000 blow their accounts in a month, and I've seen people with $500 grow it steadily over time. The difference is discipline and proper strategy execution. Broke traders see a crossover and instantly trade it, hoping for the best. They're emotional. They're impulsive. They trade out of FOMO, fear of missing out. They see a big green candle and they panic that they're going to miss the move, so they jump in without thinking. Profitable traders check if the last 2 crossovers worked. They verify their trading with the major trend. They only enter when everything aligns. They're patient and they're calculated. They wait for their setup instead of forcing trades because they're bored or desperate. Broke traders chase the market when price is way above the moving average, then get caught in the pullback and complain that the strategy doesn't work. I did this so many times when I started. I'd see a stock or crypto pumping, already miles away from its moving average, and I'd jump in thinking it would keep going. And almost every single time it would reverse right after I bought, and I'd watch my money evaporate. Profitable traders wait patiently for price to come back to the area of value. They let the market come to them instead of chasing it. They enter at a better location with a tighter stop loss and better risk to reward. And that patience pays off over and over again. This isn't about being perfect. Nobody wins every trade, not even the best traders in the world. This is about stacking the odds in your favor, one good decision at a time, one filtered trade at a time, one patient entry at a time. You don't need to win every trade. You just need to win more than you lose, and you need your winners to be bigger than your losers. That's literally the entire game. If you risk $50 to make $100, you can be wrong half the time and still be profitable. The math takes care of you when you have proper risk management. And here's the truth bomb that nobody wants to hear, but everyone needs to understand. Becoming financially successful in trading, or anything really, isn't about finding the perfect indicator. It's not about discovering some secret strategy that nobody else knows. It's about building systems that work while you learn, adapt, and grow. It's about being consistent with a strategy that has an edge, even when it's boring, even when it's slow, even when you're tempted to do something else. This is where broke ends and ownership begins. When you stop looking for shortcuts and start building real skills. When you stop gambling and start investing in yourself and your education. When you treat trading like a business instead of a lottery ticket. Let's bring this all together because I know I just hit you with a lot of information. Here's what you need to remember. Use just 2 moving averages, the 20 and 50 period. Keep it simple. Don't overcomplicate your charts with a bunch of lines you don't need. Trade on higher time frames. 1 hour, 4 hour daily charts. Get away from the noise and chaos of lower time frames. You'll see clearer trends and make better decisions. Only take the next crossover if the last 2 were successful. This single filter protects you from most bad trades and keeps you out of choppy, sideways markets that drain accounts. Use the 200 period moving average as a trend filter. Trade with the flow, not against it. Price above 200, look for buys. Price below 200, look for sells. And treat moving averages as dynamic support and resistance. Wait for price to come to value instead of chasing it. Enter when you have confluence, multiple reasons stacked in your favor. These aren't complicated rules. But they work because smart trading isn't about being perfect. It's about consistently making high-probability decisions that tilt the odds in your favor over time. If this strategy makes sense to you and you're tired of getting faked out by the markets, I want you to start testing it. Backtest it first. Go back on your charts and see how many times this would have worked in the past. Then paper trade it. Practice with fake money until you're confident you understand the rules and can follow them consistently. Build your confidence before you risk real money, because there's no rush. The market will be here tomorrow, next week, next year. Your financial freedom doesn't come from one lucky trade. It never has, it never will. It comes from understanding the game, building a solid strategy, and executing it with discipline over time. Day after day, week after week, month after month. That's how real wealth gets built. Not from one viral TikTok stock pick, but from consistency and discipline that most people don't have. You've got this. You're not here by accident. You're here because you're ready to level up and take control of your financial future. And I'm here to guide you every step of the way. Up next, we're breaking down how to invest as a teen to become a millionaire in your 20s. One of my favorite videos researched so far for the M-Cubed channel. This is straight fire for anyone who wants to start building wealth early and compound their way to financial freedom. Trust me, you don't want to miss this one. See you there, M-Cubed family.